If I had to choose just one candlestick to trade off of for the rest of my life, it would be this one right here. Hey guys, welcome to Lucid Trading Academy. Today we're going to be talking about the engulfing candle pattern. This is a single candlestick pattern formation, and if you use it with support and resistance levels, it's honestly probably the most profitable setup you could use in Forex trading. So let's dive into it. So what is an engulfing pattern? It's going to be a two candle reversal pattern where the second candle's body completely engulfs the first candle's body. It's going to signal a potential shift in market sentiment and direction, buyers overpowering sellers or vice versa. Key requirement for this is going to be the second candle's real body must fully cover the first candle's real body from open to close. So here's a bullish and a bearish example of that. So for bullish, right here we have the bearish candle, and then the second candle is going to be just larger than that bearish candle. Okay, so we can see here that the top of the body completely engulfs the bearish candle here. Same with the bottom. So it's just bigger. So basically, you could put that first candle inside of the body of that second candle, if that makes sense. And here's what a bearish one looks like. The bearish candle is larger than that bullish candle. So let's look at the bullish engulfing pattern. This is going to signal a reversal from bearish to bullish momentum. Key characteristics: forms after a downtrend. First candle is bearish, second candle is bullish. Green body fully engulfs the red body. Higher volume is going to add more confirmation. So we're going to want to find this during a downtrend. Okay, so when the market is going down, we can see all these bearish candles, and then we see a nice bullish engulfing candle. That's going to be the signal for that pattern. So again, this green candle body completely engulfs that first candle right here. So this is the first one, that's the second one. And it's going to be vice versa for the bearish one. So it's going to signal a reversal from bullish to bearish momentum. We have a bunch of bullish candles here, and then one big bearish candle. And it doesn't even need to be this big. All it has to do is be larger than that bullish candle's body right here. Okay, so it's going to form after an uptrend. First candle's bullish, second candle's bearish. Red body fully engulfs that green body, often seen at resistance zones. And that's going to be the same for bullish patterns. So those are going to be formed oftentimes, and when we're going to trade them, is going to be at support levels. And we're going to trade bearish engulfing at resistance levels. So how to trade the engulfing pattern? Step by step. Identify the trend. So are we going down or are we going up? Are we bearish or bullish? Okay. Confirm the engulfing. So if we're bearish, what we want to do is wait for price to hit a support level. Okay. Once it hits a support level that we've drawn up through previous market data, we're then going to wait for a bullish engulfing candle to form. Okay. And vice versa for bearish. If we're going up, we want to wait for price to hit a resistance level that we've drawn based on previous market data, and then we're going to wait for a bearish engulfing candle to form. Our stop loss is going to be just below the wick of that engulfing candle, or just above if it's a bearish one. Okay, the entry is going to be at the close of the engulfing candle, and then the take profit is going to be 1 to 2, or you could target the next zone. So the 1 to 2 means is if my stop loss is 10 pips, my take profit is going to be 20. Okay, but we could also target, we could have two take profits. Like the first one could be that 2 to 1, and the second one could be like the next level up, right? Strengthening the signal. So what are some things that we could do to increase our success rate? Okay, this is going to be critical because we don't want to just be taking trades when an engulfing candle forms. We want to take them at very specific, when very specific things happen, because that's just going to increase our success rate. So big thing is waiting for a support or resistance to form. Okay, we want to wait for a bearish engulfing candle to form at resistance levels, and then we want to wait for bullish engulfing candles to form at support levels. This is critical. Like, you should not be taking these trades while it's all chop. Okay, we want to wait for them to hit these key levels because that engulfing candle is a big shift. We want to look for those big shifts at those levels. So higher time frame alignment. This is going to go with higher time frame support and resistance levels, higher time frame. How's the trend looking? Did we just break a support and now we're coming up to retest that resistance? We're going to look for those engulfing candles there. Volume spikes. Are we getting the engulfing candle printed during market opens? So like New York, London, Asian Open, and then indicator confluence. So the big thing is going to be your RSI. Is that oversold, overbought? Or if you use EMA crosses like a 1450, if that's crossing while that engulfing candle prints. So common mistakes to avoid: trading without the trend. So taking a bullish trade after a bullish engulfing candle, but like the overall market bias is bearish. Like again, we want to wait for higher time frame to hit a support or resistance level. We don't want to just be taking trades just because the engulfing candle printed. Second thing, not waiting for the candle to close. It's very important with everything you do in trading is wait for candles to close, because closing is the confirmation, right? We don't want to get wicked out. Ignoring higher time frame. A pattern on the 5 minute means little if the daily is trending the opposite way. So what that means is if the daily is bearish, 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 and then we see one bullish engulfing candle on the 5 minute, the 15 minute, 30 minute, like that is not enough confluence between the time frames. Okay. Skipping risk management, so not putting your stop loss, risking too much. That's a big reason why a lot of traders fail. And then over trading the pattern. So the way you can stop over trading the pattern is just again waiting for that pattern to form at resistance and support levels. Psychology behind it. So the bullish engulfing psychology is the sellers are in control with that bearish movement. The market's going to continue to push lower. And then the second candle, which is the bullish engulfing, buyers overwhelm the sellers, and then the price opens lower but aggressively reverses, closing above the prior open. So what that means is that bearish candle, that open got overtaken by that one candle, that one bullish engulfing, right? So, and that's the opposite for the bearish engulfing. So here's a nice checklist you can have going into this sort of strategy here. Is there a clear trend? Are we going up? Are we going down? Where is the next support and resistance level? And is that going to hit today, or is that going to hit tomorrow? When is that going to hit? When we're at that level, okay, has that engulfing candle fully closed? Okay, if yes, then we can go ahead and take that trade. Again, is that pattern at a key support resistance level? Does a higher time frame support that trade direction? Okay, is my stop loss placed correctly, so just below or above that wick? And do I have at least a 1 to 2 risk reward ratio? That is the number one candlestick formation, in my opinion, in the market. If you just traded off that, you could probably be successful. But if you align it with adding support and resistance, adding the trend, and a ton of other things like that, it's just going to increase your success rate. So let's go ahead and jump over to the chart and we'll go ahead and show what that looks like. All right, so this is Euro USD, and I'm just going to show a bunch of examples of engulfing candles at support and resistance levels. So let's see here. So we have engulfing candle right here, this nice big green one. It came up, came back down a little bit to retest, and then we continued up just like that. Okay, and that's at a support level. Okay, let's see what else we got. Again, here, this is at a support level right here, because looking left, go and get my little brush. This was a support, right? We came back down to retest it and printed that engulfing candle right there, and then continued up. All right. Let's see. No engulfing. We're at resistance level, so we're looking for bearish engulfings right here. Okay. So this is a resistance level, ton of rejection, stabilizing. We printed a bearish engulfing right there. because it is larger than that previous green candle, and we continue down. All right, formed support right here, and then hit a nice bullish engulfing with that candle, and then continued up. A nice bearish engulfing right here at this resistance level, and then looking to the right, we had it again right here, and then a bullish engulfing right there, right? So this is pretty common, happens all the time. Now obviously it's not 100%, as you can see right here. This was a bearish engulfing, but it probably would have hit the stop loss depending on where you placed it right there, right? But if you tie it with a bunch of other things like a double top with engulfing candles, triple tops, head and shoulders, things like that, then your win rate's just going to go up even more, right? So, yeah. Thanks for tuning in, guys. Hope you guys enjoyed that video of the engulfing candle. Go ahead and try it out on your own. Let me know how it goes, and I'll see you in the next one.